Let me run through a few logistics before we get started. First, I'll remind you that to ask a question, you need to raise your hand by clicking on the raise your hand button at the bottom of your screen. Once I call your name, please turn on your video and unmute your line. Be sure to state your company name as well as your name. And just note there'll be a slight delay while we promote you to ask your question. As the queue forms, I'll share who is available to answer questions today. In addition to all the presenters who you saw previously, we also have 3 additional members of Sasan's staff participating. Mariana Tessel, our CTO, Mark Notriani, our Chief Customer Success Officer, and Carrie McLean, our General Counsel. Sasan will be the quarterback on our call today and either take the question himself or pass it along to a member of his team. So now we have our first question from Kash Rangan. Kash, we'll wait a minute for you to join us.
Hooray, I think we're in. I don't know if you can hear me and see me. First of all, congratulations on a terrific Analyst Day. The kind of metrics you disclosed to us and the narratives and the quality of the narratives made it really, really very compelling. So great job to the team for putting this event together. A question for Sasan. As you look at digitization initiatives on part of your customers and catalyzed by the pandemic, how do we think about life post-pandemic? In other words, does life get more digitized? Does digital transformation accelerate post-pandemic? Or is there a chance we actually go back to our old ways? I mean, as weird as it might sound, maybe there's a chance we go back to post-vaccine normal life. And if that's the case, will digitization slow down or will nonetheless accelerate? And secondly, maybe Michelle can opine on this as well. As Intuit is concerned, how are you internally going through your own digital transformation, albeit you're facilitating this on part of your customers? And as you look at your internal transformation, what are the key priorities and key investments you're making to digitally transform yourself, if that is the case? Thank you so much and congratulations again.
Great, Kash. Hey, thank you very much. Great to see you and hope you're well and safe. You know, in essence, what I would say is we're never going back. I think we've kind of leaped ahead 5 to 10 years. And I believe that there's going to be behavioral and structural changes across the globe. And really, there are 3 areas that's actually propelling a lot of the innovation that we're delivering and a lot of the uptake around our innovation. One is our virtual solutions with TurboTax Live, QuickBooks Live, and Mint Live. That is just a thrust. It's happening in every industry, and it's happening in the segments that we serve. The other is there's just an incredible focus on figuring out how to save more money and get out of debt. And that's really where our bet around unlocking smart money decisions and the work that we had laid out earlier today, which will get completely propelled with Credit Karma, that positions us to, in essence, give consumers in the palm of their hands the ability to save money, get out of debt, and get connected to financial products that are right for them. And I think the third is a acceleration to a shift online and omni-channel. And you heard about the exciting new innovation with QuickBooks Commerce. But our new acquisition of QuickBooks is now back at pre-COVID levels while we're still in this pandemic, because I think folks are seeing that a shift to online to run their business, to get paid faster, to run payroll, to get access to their money faster is just going to be essential for cash flow and their livelihood. So that is what we are seeing, what we are experiencing, and I don't think we're going to go back. Now, the reality is there will be some sense of wanting to connect in a physical world, but in these 3 areas, we won't go back. And internally, I would tell you that we've started the transformation of being in this virtual world, shifting to the cloud, shifting our tools to be all online years ago, which is actually one of the reasons, and I thank the team for this, where our 10,000 employees were actually able, literally on a dime, to go work from home and be able to still deliver for customers, because a lot of what we do internally is already in the cloud, is already virtual. And I actually don't think we'll go back to the way we used to internally either. And so I think it's the pandemic is not exciting. I'm looking forward to getting through this health crisis, but I'm actually excited for how all these behaviors will change around the world and what it will mean for our customers.
Thank you very much. Congratulations.
Great to see you. And I'll turn it back over to Ken.
Great, thanks so much, Cash. Okay, our next question will come from Kirk Matern. Kirk, we'll bring you up and you can go ahead and unmute and turn on your camera, please. Be sure to unmute.
There we go. You have me?
Yes, perfect.
Perfect. Thanks very much for all the time and the presentations today. I guess maybe for you, Sasan, on the QuickBooks side, with commerce today being launched, just kind of curious what you're seeing in terms of clients wanting to consolidate the number of SaaS vendors they're using within the small business ecosystem. Meaning, while the trend to SaaS is still ongoing, there's a lot of apps that people are using. To your point, or I think some earlier points, people are trying to figure out how do I make my life easier, not more complicated with other vendors or services. So where do you see those trends going? And then I guess specifically around commerce, what do you think you can do in that particular area, maybe around inventory management or order management that they weren't being, that clients weren't being helped out with via?
Sure. Great. No, thank you for your question, and very nice to see you. Let me take the first part of your question, and then I'll turn it over to Alex to add a little bit more perspective on QuickBooks Commerce. First of all, I would say that customers really care about cash flow management, and they're really looking to understand where do I stand and how do I ensure that I have as much cash in my account as possible, which means that they're looking to get paid fast. They're looking to hold on to their money as long as possible before money comes out to make payroll. They're looking to get access to QuickBooks Capital. So it's all about cash management. And really, that's the essence of why our strategy is about being an open platform. We want to ensure that anything that the customer needs is on one platform, whether it's an app that we've created or it's an app that somebody else has created. We want to make it seamless for the customer. And that's why our focus is on kind of deep integration of the applications and being able to leverage their transactional data to be able to ultimately give them some of the insights that you, for instance, heard Rania talk about. That can only happen by having an open platform where we can leverage the data to provide insights to customers. So ultimately, the customer is looking for being able to manage their cash flow, and they're comfortable using multiple different apps as long as those apps are talking to one another and it helps them understand how to manage their business. Where they get into trouble is when there's multiple different things that they're using. They're in very different places, and they're having to manage their own cash flow through Excel, and that's where things fall apart. And that's actually why I'm so excited about our QuickBooks Commerce strategy, which is being an agnostic platform to help customers connect to mega channels like Instagram, Facebook, Etsy, and others, to be able to put up their own website and store, to ultimately be able to accept payments in any which way that they want, and then equally as important, ensure that it connects to their inventory and ultimately so they can fulfill the orders. So they can use multiple different applications. That's why you heard Alex talk earlier that we have 50 plus partnerships and we're just getting started. In fact, moments after we went live, we got our first customer organically. And we're really excited about the possibilities. Alex, would you like to add anything?
Yeah, thank you, Sasan. So just, what you described was, in terms of multiple apps coming together, these small businesses are fighting for survival. And our job is to make sure that we are removing friction across the board. Whether it's using multiple apps, that's fine. But if they don't talk to each other, then there's a challenge. And that's why our strategy to be the source of truth for your business is so critical. We're removing the friction. And you saw it in the cash flow example that Sasan gave. You saw it in being able to do workflows across in our QuickBooks Online Advanced product. All of that is in service to removing friction. And then when we think about QB Commerce, it's the same thing. I painted the picture. If you're just focused on inventory for a moment, if you're selling through a single channel, you can manage your inventory on a spreadsheet or on pen and paper. But as soon as you add that second channel, what do? You're now trying to reconcile orders from multiple different places and have a source of truth that is inconsistent. And that's where we thrive. We want to be that source of truth for our businesses to help them manage that inventory, help them manage their orders, and remove friction across the board. So we're very excited about this because by unleashing our small businesses for growth, we think we're going to get them access to channels they couldn't have even dreamed of before. So excited to launch this today and see how we help our customers accelerate their growth. So Sasan, back to you.
Awesome. Thank you, Alex.
Thank you.
All right. Next question.
Okay, thank you so much, Kirk. Our next question comes from Jen Lowe. So it'll take just a minute, Jen, while we promote you into the webinar. Please unmute your line and be sure to turn on your camera.
Great. Thanks. Thanks for taking the question. I wanted to talk a little bit around the trend line in QuickBooks Online. And clearly this year, there was a lot of challenges out there that we're all well aware of, but that did decelerate maybe even a bit more sharply than I would have thought. So can you talk a little bit about what that trend line might have looked like first half versus second half? And should we expect that over time to get back to that $1 million or 1 million customer plus ad rate, or was last year kind of a peak as you focus on expanding within the existing base?
Yeah, sure. Good to see you, and thank you for your question. Let me start with the latter part of your question. I would tell you that we now have more front doors and the ability now to serve the entire marketplace, from those that have no employees all the way to 100 plus employees. And now with today's announcement, both service-based businesses and product-based businesses, and vastly greater set of services than we've ever had. And so we actually feel very good about the opportunity, and the TAM is significant. So when you think about the opportunity to penetrate the TAM, the penetration is still very low, and we're just getting started. I think what we wanted you to take away from today is the fact that we want you to think about a formula, which is growing customers between 10 to 20%, growing ARPC between 10 to 20%, and that will lead to 30% plus online revenue growth, and ultimately the 10 to 15% long-term expectations. We've not at all peaked out. We just wanted to simply give you a formula as to how to think about it, because that mirrors, how we are now going to market and being very intentional about how to go to market. So that's kind of one element of your question. I think the second is, from the trends that we shared at earnings, which actually had improved from when the pandemic first started, we're continuing to see an improvement in trends. In fact, our new acquisition trends are back at pre-COVID levels. Our payments volume continues to improve. We're now about 7 to 8 points below pre-COVID levels, but that's just been a continuous improvement. The number of companies running payroll is now only 4 points below pre-COVID levels, again, continuing to improve. And so the great news is we're inspired by our small businesses. They're scrappy. They're starting to come back as the economy opens up. Now, it looks different by part of the country, but those overall trends continue to improve. And we feel like we've got incredible runway, back to the latter part of your question, as we look ahead, based on the number of front doors, serving product and service-based businesses, and then the number of services that we now have. So think about it not about a peak, but more about now the opportunity is vastly greater and different based on our innovation.
Thank you.
You're very welcome. Kim, back to you.
Thank you, Sasan. Thanks so much, Jen. Next, we'll go to Matt Pfau. So as we promote you, Matt, please remember to unmute your line and turn on your camera.
Hey, can you hear me now?
Sure can.
Great. Matt Fall with William Blair. Just wanted to ask on the QuickBooks Online on the international side. So when we think about expanding QBO into new geographies, if we look at that chart that you put up, France and Brazil have been in that sort of emerging market category for several years now. So what does it take to move them into that established market category? And then, when you think about the experience that you've had with expanding into France, anything there that could be used to more directly target other European countries?
Yeah, a great question, and very good to see you. So a couple of things I would say. If you go back a few years, we implemented a global playbook, and that's really been instrumental in the clarity that it's provided us, both in terms of how we think about execution in the countries that we're in and how they get promoted from kind of a Horizon 3 to a Horizon 2, which is an established country, and how they get demoted back to what we call rest of world, where we shift investment level. So the global playbook has really been instrumental. And it also informs which countries that we enter and how we enter those countries. So that's, I think, element number one. Element number two is we're very pleased with France and Brazil. Let me just focus on France, since that was the focus of your question. We believe the opportunity in France is actually quite interesting and quite large. You know, France is sort of where the United States was 10 to 15 years ago, when it came to the usage of a platform and accounting software, high usage, but a lot on the desktop. And now what we're seeing, and we think it's going to move much faster than the US did. Now what we're seeing is a shift to the cloud. Both accountants are seeing as an opportunity to be much more effective and efficient in their business by being in the cloud, and small businesses. And I think this current environment, when in essence France, like the rest of the world, had to in essence shut down and shift to virtual and online solutions, they're actually seeing more so than ever the criticality of being online. And so we're now in a place where, based on incredible work by our teams, we're at a point where we have product market fit, and it's now continuing to expand what we build out on the ecosystem, and then continuing to raise awareness in France. And so, you know, I wouldn't be able to give you a timetable at this point because it's really driven by uptake by customers and the velocity of our execution. But we would foresee France being one of the countries that, you know, at some point will shift into Horizon 2, which is one of our established markets with a big opportunity ahead.
Great. Thank you.
Yeah, thank you. Kim, back to you.
Okay. Great. Thanks, Sasan, and thank you, Matt. Next, we're going to go to Siti Panagrahi. And Siti, while we promote you, I'm just going to remind you to unmute your line and please turn on your camera. I'll wait for just a minute for Siti to join us.
All this technology at work.
All right. First of all, congratulations for a successful virtual analyst day. Big shout out to team and our team. Yeah. So on the QuickBooks side, I see you expanding your TAM, moving up market and international, also driving ARPC. I just want to dig into these two new products. First of all, on the QuickBooks Cash, what percentage of your install base or the potential addressable, like you see 65 million, do not have a bank account? And I see that you're partnering with a bank. So what's your monetization strategy there in terms of, you know, monetizing there? And where do you see an opportunity further for, you know, this to help you acquire, you know, more customers?
Yeah, sure. Well, first of all, thank you for your compliment. It's all the accolades go to Kim and the team for pulling this off. And let's knock on wood that nothing goes wrong until we're done with Q&A. You know, the way I would think about QuickBooks Cash is less about going after the underbanked and whether or not you have a bank account or not. But if you think about the framing that Rania used, it really goes after the core problem of having one place where I can, in essence, receive and send money, and where all my accounting gets done for me. So that's the power of QuickBooks Cash. And in essence, when you send an invoice, money will get deposited into your QuickBooks Cash account, which is in essence your checking account. Then you can ultimately send money to your employees because it's connected to payroll right from that bank account, and it'll happen the same day. You can get access to a loan that can get deposited into that account. So think about it. And by the way, because of all the transactions happening in the app, the accounting can just get done in essence for you in the background, leveraging our knowledge engineering and ML models. So we believe that, and this is our belief is based on, you know, several years of work and the behaviors that we're seeing from customers now. We believe this will be very disruptive because it will be very simple for a small business just to manage all of their money in one place. And we believe it'll actually entice them to shift some of their bank accounts to use QuickBooks Cash because it's the one place where they can manage everything. They don't have to worry about multiple different bank accounts. And we believe that those that just start a business, this will be very attractive to, and also those that already have businesses, they'll find this attractive because it's going after a core problem of cash flow management where we make it just drop dead easy. So that's the way to think about QuickBooks Cash.
Okay, thank you.
Thank you for your question. Kim?
Yeah, thank you, Sasan, and thank you, Citi. Okay, next we're going to go to Scott Schneeberger. So Scott, as we open your line and bring you up, just a reminder to unmute your line and turn on your video, please. We'll just wait for 1 minute as Scott joins us. Okay, Scott is stuck. We'll move to the next question. Just 1 minute. Okay, Darren Baker, you have the next question and we'll promote you and we'll go back to Scott in a few minutes. But Darren, just a reminder to turn on your camera and unmute your line. We'll give Darren just a minute to join us. Okay, Darren, you're on.
Hey guys, good morning, and thank you as always for taking the time to talk to us about the business. My question is actually on the consumer side of the house, and it's focused on kind of the shock that we've seen to the parts of the consumer economy this year due to COVID impacts. You've talked about with your I think it's big bet number 3, trying to help people unlock those money decisions that are important to their financial wellness. And I feel like, my assessment kind of from a distance is that there's probably a much greater need for that at this point in time, just given the financial impacts that many have felt this year. But there's also been effects where banks are, tightening lending standards, pulling back on some products and things like that. I wonder if you could just tell us, how you see the situation changing or the needs changing, I guess, for those consumer products, both Turbo and Mint, as well as upcoming Credit Karma, in this environment that we're in right now, and how you would anticipate that situation evolving over the next couple of years.
Yeah, sure. Thank you for the question. First of all, I would say the need will not change. When we look at all the data over the years and spend time with customers, one, they really strive to get access to the money that they have earned, whether it's the tax refund, whether it's their week-to-week paycheck. They really would love, rather than getting that money on Friday, they would love to get access to it on Wednesday, or rather than waiting 2-3 weeks to get their tax refund after they file their tax, they'd love to get access to that money right away. So that need hasn't changed. It's become a lot more acute given the current environment, but the need hasn't changed. The other need is, consumers don't really know if they're applying for a credit card, if they're getting that credit card at the best rate, or if they go and buy a car, if they're getting, they're mainly negotiating the monthly payment of that car, but never focused on how much interest am I paying. When they're getting insurance, they really are focused on just that insurance provider and whether or not that fits their needs. And so they don't have, the power is not in the hands of consumers. And that need and that problem has been the case for years. And so the reason, we shared the vision that we did today, that Credit Karma is going to propel, is really we want to put the power in the hands of the consumer. We want them to be able to get early access to that paycheck without having to pay tons of interest. We want them to get access to their refund earlier without having to pay a ton of money. We want to be able to offer them multiple different financial product choices if they have a need, whether it's personal loans, credit cards, home and auto insurance and loans, that's right for them. And ultimately, if they actually just need expertise and help, on a click of a button, they can chat with one of our experts or have the expert come on their phone, just like you see with TurboTax Live, to provide insight. And so those needs haven't changed. This environment is significantly propelling it, which is why we felt like we needed to speed up our time to market. Although we've made tremendous progress with Turbo and Mint, we felt like we had an opportunity to really accelerate our innovation. And so when we come together with Credit Karma, what we bring together is the combination of our data, which is our customers' data that will allow us to accelerate innovation, all of our money movement capability and our risk fraud capabilities, which actually allows us to give early access to your paycheck or your tax refund. And we have experts that we can bring onto the platform to help you at a time of need. And so when you think about Credit Karma and us, you're bringing 150 million customers together. You're bringing just an incredible amount of customer data together to put the power of the data in the hands of our customers, and two brands that customers trust so that we can put the power in the hands of the customers. And more acutely to your question, I think this environment has made those needs much more acute, which is why we're so excited about the possibilities as we look ahead to closing Credit Karma and then ultimately what we'll be able to deliver for consumers.
Thank you.
Thank you. Kim, back over to you.
Great. Thanks, Sasan, and thank you so much, Darren. Next, we'll go to Keith Weiss. So while we bring you up, Keith, I'm just going to remind you to please unmute your line and turn on your video. We'll give Keith just a minute to join us. Okay, Keith, go right ahead.
Thank you. And again, echoing the thanks for hosting this event, another great event by you guys. Sasan, a question for you on sort of the commerce play. It seems to be sort of the big new introduction of what you're talking about today. Can you help us understand how you're thinking about the competitive environment there? Because we hear similar kinds of back-end stories being told by the big commerce vendors like Amazon's Given Fulfillment and Invoicing, Shopify, and those guys have a ton of momentum in the marketplace. They have huge customer bases, small business. Is this competitive? I mean, it has to be in some way competitive to what they're trying to do. Number one, and number two, where do you guys see the differentiation, and sort of where can Intuit sort of carve out a role for themselves in there?
Yeah, Keith, first of all, great to see you, and I'm glad you're safe and sound. Let me start with an example, a parallel example that we've been executing on our platform for years, and then I'll focus specifically on your question. When we talk about this notion of solving our customers' problem, and specifically the area of getting paid, and this essence of the fact that we are an open platform, when you look at our platform, we've got our own payment capabilities, we've got PayPal on our platform, we've got Square on our platform, and the reason we do is because we want to ensure that small businesses can get paid the way they want to get paid by their customers. And we don't think about it from the mindset of, well, PayPal and Square, there are days that we compete with them. We think about it in context of we want the customer to be able to transact on our platform, because eventually all roads lead to QuickBooks. You have to be able to stay compliant. You have to be able to do your accounting, which is, by the way, why we now have an expert with QuickBooks Live that can be there along the way to help you. And so that has worked very well for us over the years. And yes, there are days where we may be competing with a Square, and I could say the same for Gusto, payroll. We have them on our platform. Many days where we compete, many days where we don't. So our mindset is this is truly about an open platform focused on the customer problems that we've articulated to get customers to use our platform to run their business, because then we can leverage all of that insight and data to deliver more innovation for them. So I wanted to start with that parallel example because it's very real. We've been executing it for years. The same applies here. Ultimately, we have, as you heard Alex talk about, we actually have 1 million product-based businesses, and our focus has not been product-based businesses. We've primarily been focused on service-based businesses. And our customers, especially in the last couple of years, have talked to us a lot about, hey, I'm using QuickBooks, but I want to be able to serve customers on multiple different channels. I want to be able to use different POS providers, but ultimately I want to be able to do all of this on your platform. And so we've got a lot of customers that have given us feedback, and ultimately we are now at a point in our journey where we're prepared to really declare going after product-based businesses to serve them, because ultimately they're going to use QuickBooks, but we want them to use QuickBooks as the source of truth for their business and not just the source of truth for their books. And so therefore, just like payments, we're an agnostic platform. We actually have, as part of this launch, Shopify is on the platform. And really our differentiation is we're not just trying to be a channel for you. We're simply focused on your needs. We want to help you get set up on multiple different channels. Amazon is one of our partners. Shopify is one of our partners. and ultimately to help customers with order management, inventory management, to make it easier to use QuickBooks. So there will be days when we are competing with some of the players that you mentioned, and there will be days where we are partners, just like in payments. And so it gives us the opportunity to really serve these customers more broadly, be able to really play in serving product-based businesses, and be able to expand our services and ultimately help some of our partners. So that's the way we think about it. It's been a very successful strategy over the years, and we believe it's going to work very well based on the 18 months of planning that we've done and the launch that we just shared. We believe it'll be equally as successful because ultimately our focus is the customer.
Excellent. That sounds great. And if I could sneak in one follow-up, just on kind of the overall kind of philosophy that you guys are talking about today. I mean, I feel like the Intuit story for a long time, especially within QuickBooks, is there's a huge market opportunity out there. A lot of small businesses that don't use anything, right, for small business accounting, and a ton of new customers to go after. It seems like we're shifting a little bit today towards more so higher value of the solutions that we're selling to those customers, whether it's QuickBooks Advanced or sort of a broader commerce play, or am I correctly sort of picking up this shift that it's a little bit less of a focus on just going out there and getting as many new subscribers and many new customers as we can, and more of a balance or maybe even a shifting towards higher value solutions for those existing customers?
Yeah, Keith, I would say you nailed it, and it's an and. You know, in the past, you nailed it in that, you know, if you wind the clock backwards and you think about the way Alex kind of walked through the story today, we were in essence very satisfied to serve customers from an accounting perspective. And really it was just do-it-yourself accounting. And over time, we built some of the payments and payroll capabilities. When you look at us today, we've really expanded our services to ensure that the customer can run their entire business on our platform. So we're interested in those that are new to the franchise and getting new customers. But now we have the capability based on all of our front doors to actually serve customers that have no employees all the way to 100 plus, both service-based and product-based businesses. And then we've expanded our services with things like QuickBooks Live, QuickBooks Payroll, full service. And so we just have a gamut of front doors and services. And I think that's critical if you're going to play in the cloud. You have to be able to have those services to serve customers. And our very strong view is you have to be an open platform because you don't want to corner a customer to only use what you have, but to ensure that you're truly customer friendly. Because if you are and they're using other apps, they'll choose to transact on your platform more than others because you're serving their needs. So I would ask you to think about it as an and just to, you know, put a bow around it. That's why we wanted to give you a formula. You know, for years we've given you a formula in tax, right? It's been IRS growth, category growth, our share growth, and then ARPC gives you the long-term expectation of 8 to 12%. Here we wanted to give you a formula that 10 to 20% customer growth, 10 to 20% ARPC growth because of all of our services will lead to the 30% plus growth. And that's mapped to the strategy and the way we're kind of executing our innovation. So hopefully that's clear.
Excellent. Super helpful. Thank you.
All right. Great to see you.
Okay.
Tim, back to you.
Thank you, Sasan, and thank you, Keith. Next, we'll go to Scott Schneeberger. Give him a minute to get over. Hopefully he doesn't get stuck this time. Great. Good to see you, Scott. Go ahead with your question.
How are you? Thanks. Yeah, glad I'm able to get through. I guess I have two questions. First one is on in the consumer segment in tax. The last few years, there's been really nice growth, revenue per return, reiterated today about 3%. Curious if you can just compare and contrast how that will come via rate versus TurboTax Live penetration, because obviously on the paying customer chart that Greg had, I think it went 80 to 89 to 97 now on average revenue per return. Just curious how those break out going forward. Thanks.
Sure. Very good to see you. You know, first of all, if I could just start with, you know, our focus is one on underpenetrated segments. It's those that are investors, Latinx, and self-employed. And then there is the assisted segment, which you heard Greg talk about. You know, it's a $20 billion TAM. It's 86 million customers. And based on the research that we've done, well over 70 million customers are actually willing to switch as long as they have confidence that their taxes get done with an expert in the comfort, of their home or office. And so as we think about growth moving forward, we see the growth in those two buckets. It's going after the underpenetrated segments, and those underpenetrated segments are both do-it-yourself and do it for me or with me. And of course, the vast majority of the opportunity and growth is with TurboTax Live. And so I would just say that that will translate into probably more ARPC growth over time, because we're going after a segment where they're actually paying more for their taxes, and we deliver more value and we have more pricing power. We've not shared the specific mix that you should expect. I think the big thing to just expect is as you look at our growth, it will come from category growth, share of the total IRS bucket, and also ARPC growth, just because of our TurboTax Live platform and the fact that we're just getting started. I mean, our growth is incredible, but the penetration is very low. So we believe we've got a 10-year runway here.
Okay, great. Looks like Scott continues to have a few problems. So thank you so much for your question, Scott. Glad you were able to get it in. Next, we're going to move to Brad Zelnick. So we'll promote you, Brad. Just take a minute to do that, and then please turn on your camera and unmute your line.
I like the idea of getting promoted to the Zoom room.
Yeah, it's pretty cool.
Oh. Hey, sorry about that.
You're on, Brad. Please ask your
Excellent. Thank you so much. What a great day. And it's one I look forward to every year in covering Intuit. My question is for Michelle. Michelle, you talked about driving faster core margin improvement near term, and which I think you attributed to your platform approach with investments such as innovation and AI really paying off. If I think of that in the context of your principle of allocating capital to the highest value opportunities with a 15% IRR hurdle over 5 years, should we think about this as seeing stronger IRR or more a compression of the time horizon of the investments you've made? And maybe related, how do you handicap the IRR on longer duration projects like the investments and the bets that you're making in AI long term?
Brad, since they have assigned me as the quarterback, let me get us started.
Oh,
I'll turn it over to Michelle so they can then Kim can bring her in so she can answer also your great question. Brad, the way I would think about it is we are now simply starting to get platform leverage. And truly, I know you've heard us talk about this the last couple of years, we are truly getting started. When you think about our virtual expert platform, where it took us years to build out TurboTax Live, it took us months to build out QuickBooks Live, and literally weeks for Mint Live. Or you look at all this money innovation. Alex didn't even talk about some of the incredible innovation that's going on in payments because we didn't have time for it. We let Rania get the room for talking about QuickBooks Cash. But QuickBooks Cash, the same day, instant payments or instant deposit, same day payroll, this is all using our money movement capabilities, which is about risk and fraud. And so the reason I wanted to just refresh us on those two examples is we're just getting started to get leverage in terms of building things once and then innovating on top of these services, which is really what gives us the opportunity for margin expansion. We're just going to get a lot more leverage for the investments that we're making. The other is what you said. It's velocity of investment to innovation to turning into revenue and ultimately operating margin. This past year, our innovation accelerated 3x compared to the year before. And our view is we're not even close to being at our best. And so the faster you code, you put that code in production, you get data to optimize and then release it at scale, the faster you're going to get a return on that investment. So it's both platform leverage and it's just time to market. And those two combined is really what gives us the ability to expand margins over time. But I think more importantly, for us, it's all about growth. So we want to get the customer growth and the revenue growth, and the margin expansion will come with it. Michelle, would you like to add anything based on what I just shared?
You did a great job, Sasan. The only thing I would say is that, Brad, yes, our financial principles still play. I mean, we're still focused on driving organic revenue double digits. And of course, as you mentioned, our target of how we invest in the highest yielding opportunities. We're still targeting the 15% ROI over 5 years. Other than that, I would say, Sasan did a great job there, and we're continuing to look for ways that our platform can help us drive accelerated growth, especially as we are investing in the 5 big bets. So thank you.
Thank you, Michelle.
Thank you so much, both of you, and really appreciate the thorough answer.
Great to see you, Brad. Thank you.
Likewise.
Okay, great. Thank you so much, Brad, for your question. Next, we're going to go to Brent Thill. And as he is promoted up to the Zoom room, I just wanted to share, we have quite a few questions that are remaining in the queue. We'll try to get to as many of those as we can. Okay, Brent, you're up. Go ahead.
Thank you. Sasan, my questions are on pace of innovation. It really feels like you're on offense. I don't know if that's Michael Jordan behind you, but you feel like you're running like Jordan. Maybe if you can just talk to, in the last 15 years you've been at the company, have you seen a period, at least for many of us that have covered you that long, I don't think we recall a period where we've seen this level of innovation. So if you could just give us a sense of where you're at, and I've got a follow-up from Michelle.
Sure. Well, first of all, that's Kobe Bryant behind me. I'm a big Lakers fan, but I stand on the shoulders of my team. They're actually the ones that are leading this incredible company, and I just happen to be the talking head on this call. The reality, I would just tell you that we are standing on the shoulders of many prior to us that have built some of the foundations that we're now simply accelerating. And the accelerated innovation is very, very real. I give a lot of kudos truly to this team and those that you heard today from Mariana and Mark that are truly focused on solving the problems in a way that's focused on not only being a platform, but also ensuring that we apply AI, because the other element is our AI models into production are up 50% year over year. And again, we're just getting started. And the second is just the boldness of our general managers to focus on the customer being the compass and having the courage to push us to be bold to deliver for customers. So it is just simply, years of building on each other's foundation that now we're starting to experience this innovation, and we're just, we're asking ourselves to be more courageous. We're asking ourselves to be much more customer obsessed. We're asking ourselves to set a higher bar, and I think everybody is just, stepping up to that bar. But at the end of the day, it's about truly building out a platform and executing on our strategy. And I think that's what you're seeing here, and I think our innovation is going to continue to accelerate.
Great. And then a quick follow-up to Brad's question for Michelle on margins. You hit roughly 35% at the end of last year. Many of your software peers that are at scale are above 40. Is that a long-term aspiration target? Do you believe that there's anything that would prohibit you from getting closer to that 40+% mark?
I'll just make one statement and I'll let Michelle jump in. There is nothing that prohibits us. And as I just said, some of the those that we admire, that we watch, they've reached a level of scale and building out their platform. We have not yet. We're just getting started. And as we do, we're just going to be much more effective and efficient in our innovation to drive growth, which means operating margins can expand. So there's nothing that prohibits us structurally to get there as a company. And I would foresee us to be able to accelerate in that area. But Michelle, the question was for you, so I'll let you jump in.
Yeah, that's absolutely correct. Thanks for the question, Brent. It's really, there isn't anything structurally. And as you have seen now with the point of margin expansion that we had in FY20, and as I talked about earlier, we specifically see in the 3 different areas, when you think about the P&L, we look at opportunities in technology, in customer success, in go-to-market. We actually see opportunities in all of those areas to be able to leverage key services and capabilities to really be able to help us expand margins and deliver for our customers as we become more of an AI-driven expert platform. So we actually see opportunities across the board to enable us to do that. And we don't have a set goal. We don't have a set cap on margins. It really is about continuing to invest so we can drive customer growth and revenue growth, and then using the opportunity to leverage, expand margins across as we become more of an AI-driven expert platform.
Great, Zay. Thank you.
Thank you.
Great. Thanks so much, Brent, for your question. Next in the queue, we've got Alex Akin. And as we bring him up to ask his question, I just wanted to share we've got about 3 more questions in the queue, so we'll take all of those. So Alex, you are up. Go ahead and ask your question.
Hey guys, thanks for having me. And Sasan, great job today, as well as everybody else. I guess a lot of my questions have been asked, but what I'll ask is, you did mention, I think in the previous remarks, seeing continued improvement in core metrics since the last earnings call. And I guess in the demand environment, I'm wondering if you could expand a little bit about how close we are to a full recovery. Where are the kind of key risk points incrementally from here? And then as you look at kind of, let's call it lapping the peak impacts of the pandemic on the underlying business, when you think about the growth contribution margin of your big bets, how do you stack rank them in terms of impact?
Got it. Very good to see you again. Let me parse I think there's 2 elements of your question. I think the first one is, we look at the data on a weekly basis, and the recovery is very different by state and by industry. So I, of course, shared, aggregate data, but, for instance, in places like New Jersey, Arizona, Georgia, those states are actually recovering much faster when you compare them to states like New York, California, Michigan, where the recovery is actually slower. So that's at a state level. And then when you look by industry, as you can imagine, industries like fitness, education, restaurant is actually recovering much slower than industries like computer, software, bookkeeping, landscaping, et cetera. So it's different by state and it's different by industry. And I think it's really a result of the virtual world that we live in and what's open and what's not. And so I think, and that's what's driving the shift, by the way, to a virtual world and to the cloud, because ultimately these small businesses are really trying to survive, and they're just very, very scrappy. So I think as we get through this health crisis, what we would foresee, because as we're watching the data on a weekly basis, is that the states will become more even, the industries will become more even. But I think the way they'll do it will be very different. It'll be more in a virtual world, an online world, and more focused on money and cash flow, that's where our bets and our innovations that you heard today are really focused. I think the second part of your question, we talk about our bets as 5 bets, and we talk about them separately, but it is truly incredible how interconnected they are. Revolutionizing speed to benefit is actually the core thrust to everything that you heard today. It's all about data, and it's all about AI. So it just runs across all of our bets and our core innovation priorities across the company. Connecting people to experts is not only helping customers virtually to get their taxes done or to run their business, but also those that may need financial advice. When you think about disrupting mid-market, we see some good usage of QuickBooks Live with our mid-market customers in conjunction with QuickBooks Advanced. So there's just an incredible connection between these bets, which is actually what makes them powerful, because they're really focused on what matters most to our customers. And I wouldn't distinguish between which ones will give us more leverage and which ones won't. They work so well together and so focused and core to our customer problems, and all based on a platform play, which is why we treat these bets as they all have to be resourced to win. It's the top focus of myself and the management team, and we review progress with our top vice presidents that own input goals for these bets every single month to ensure that we can make consistent progress against all of them. So that's the way we think about it internally, and I would say the leverage comes from all 5.
Perfect. Thank you guys so much. And congrats on a great day.
Great to see you.
Putting this together.
Thank you. All right, Kim.
Thank you so much. Thanks, Sasan, and thank you so much, Alex. Okay, we're on the home stretch. We're going to get a couple more of you in. Really appreciate all the engagement and the questions. Next, we're going to go to Josh Beck. So Josh, as we bring you over, please remember to unmute and turn on your camera. 1 minute for Josh to join. Okay, Josh, go right ahead.
Thank you so much for doing this day. It's been incredibly helpful. I wanted to go back to the QuickBooks Cash product that stands out to, when I look over time, one that really has a lot of potential. So when you think about how successful you've been with some of the other products, for example, payroll, payments, is this a type of product that has that type of ceiling, or is it maybe more something that is adjacent? We'd love to.
Sure. Well, first of all, great to see. I'm going to turn this over to Alex in a moment, but I just want to start with sort of a couple of underlying points. One is all the services that we've been building over the years around our money movement capabilities is what QuickBooks Cash sits on. So the capabilities that we've built over the years that enables payments, enables payroll, enables QuickBooks Capital, enabled how quickly we were able to move with the Paycheck Protection Program. We have all these capabilities that really allows us a lot of leverage when it comes to innovation and what we can do because of the fact that we have a lot of data, that it's our customers' data, and a lot of machine learning capabilities that allows us to innovate very fast. I think the second thing is, and this is where I'm probably stealing Alex's thunder, so Alex, you got the floor after this. We see unlimited potential here because it goes after the core problem that matters most to our customers, which is the one place where I can manage my cash. My money comes in, my money goes out, my accounting is getting done for me, and it's connected to the ecosystem, which is what we've been investing in for years. So for us, there isn't a limit of could it be as big as a payments or payroll. We actually think it leverages and it stands on the shoulders of these capabilities to solve the problems for customers. But let me let Alex build on this, please. So Alex, go ahead.
Thank you. So thanks, Hassan. So just to echo that, let me hit on two things. One, right where you were just now on the customer problem. Our customers are trying to solve money in and money out challenges, and ultimately that leads to cash flow. And what's so exciting about cash, you heard Rania talk about it, is this is really hitting at the core of how do we get their money into their hands faster? How do we make it drop dead easy for them to hang on to their money longer, understand how to pay their bills, make their payroll, get access to capital when they need it the most, and actually reduce all the friction of what they're doing now, which is multiple accounts, multiple entries into ultimately into their bookkeeping and trying to manage a cash flow headache. So we're really excited because it solves a key customer problem. From an opportunity standpoint, it is also dead in line with our strategy to shift from being the source of truth for your books to the source of truth for your business. Just to put that into context, we have over $2 trillion of money that's entered into QuickBooks every year, either as a money in or a money out transaction. And in our history, that's been great for us. We have been the source of truth for your books. We've been there to reconcile those transactions, but that's extra friction. That's added work for our customers to be able to put all that money in. What QB Cash does is it unlocks us and puts us in the middle of those transactions. And so from an opportunity standpoint, we think we're sitting on a real opportunity to make it drop dead easy for that money to come in, the money to come out, and us to do your books automatically. So unlimited opportunity there, and excited to see it scale. Sasan?
Thank you.
Yeah, that's great. It certainly seems like a very timely product launch with everything that's happening. So again, team, thank you. I thought it was an excellent day. Appreciate it.
Thank you. Very nice to see you.
Thank you. Thanks so much. Next, we're going to go to our last question for the day, Dan Jester. And thank you again, everyone, for all of your questions. Really appreciate them. So we'll give Dan a minute to join us.
Great. All right. Well, thank you, everyone. Thanks, Kim, for squeezing me in. I really appreciate it. I think maybe just to double click on that last question, maybe from a different angle. I think in Alex's presentation, he talked about sort of client growth at the very low end of the average revenue per customer, and that slowed very meaningfully relative to sort of the client growth for higher ARPC customers. So how deliberate is that versus sort of the economy? So that's question number one. And then question number two is, when you think about innovation and where to invest incremental innovation dollars, do you think about sort of targeting your customer base and seeing all of the opportunities sort of that mid-market level, or are there more opportunities sort of down market, or do you think it's across the entire portfolio? So maybe just a couple of questions there. Thanks.
Yeah, no, very helpful. Thank you for your question. I was so focused on the second part of your question because our air conditioning came on and I couldn't hear you that I forgot the first question. So can you repeat your first question again?
Sure. So just in an earlier presentation, you broke out customer growth by ARPC over the past year, and it was much faster at the higher end.
Oh, right.
Much lower at the low end. So how much of that is deliberate versus how much of that is just the economy?
Yeah, very helpful. Thank you. Well, welcome to the world of working virtually. I never thought I couldn't hear questions because of our air conditioning. I would say it has very little, if anything, to do with the economy and everything to do with intentionality of the fact that we now have just a gamut of services that we provide, and we're in essence increasing our wallet share. And so if you remember, when I walked through our 7 performance drivers, one of the things I articulate is I believe, and we believe, that we can get better at even more innovation and increasing wallet share. And I think that's what you are seeing here. And in fact, we believe that when the economy bounces back to pre-COVID levels, it'll actually be in essence, a tailwind. So that's one element of how we think about it. I think the other is all the areas that we are focused on around our 5 bets and how we then very intentionally and choicefully go to market. We truly believe they are all critical. The good news is we don't have 100 priorities. We have 5 bets that we focus the entire company on, and how we choicefully focus on innovation, how we choicefully focus on investment levels, and then how we think about our go-to-market, both new customers and existing customers, is really focused on the bets and the customer problems that they go after. So that's the approach that we use and the way we think about it. And I think this is something Mark said earlier. We've been working on these bets and these innovations for more than 18 months, and it just so happened that some of them are hitting at a time that customers need it most. And we just believe as we look ahead, it's our obligation to help customers when they need it most. And I think we've got these 3 trends: shift to virtual, a shift to money matters more than ever, and a shift to online and omnichannel that just will be a tailwind for the company as we look ahead.
Great. Thank you very much. Great event, guys. Appreciate it.
Thank you.
Great.
And Kim, if that was the last question, maybe I'll go for close, but I'll need to get a head nod from you. Was that the last question?
That was the last question. It's all you.
Okay. Well, I would tell you, I can't thank all of you enough on behalf of our entire team for hanging in there and making it through Q&A. We know it's harder in a virtual environment to hang in there in front of your screen. So thank you very much for your time. Thank you for all of the questions, and we look forward to seeing you in the very near future. And please be safe and stay well. Thank you very much. See you later.